Hello, my dear students and my YouTube viewers. Today, I'm going to start the practical problems on profit and loss of preparation account. This is my first video on practical problems, and this is my trial also. Please send me a feedback whether you are satisfied with these videos or not, whether my efforts works for you or not. So let's get started. So let us read the problem. So in order to copy the problem, you may follow the description. I will give you the questions there. I will upload the questions there. So I'm reading the questions. X, Y, and Z are partners sharing profit and losses equally. That is, the three partners, they will share profit in the ratio of 1:1:1. Their capital balances as on 1/1/24 was rupees 50,000 and 60,000 and 70,000. Prepared profit and loss of preparation account for the year ended 31st December 2024 after considering the following information. Interest on capital at the rate of 5% per annum. X is entitled to salary of 5,500 per annum and Y rupees 300 per annum. Z is entitled to commission of 10% of net profit before charging such commission. Net profit before the above rupees 70,000. So I have drawn the format. So let us recall the format. While preparing profit and loss of preparation account, you should keep in mind that it is a nominal account. So it has two sides, debit side and the credit side. On credit side, we have to record the income, and on debit side, we have to record the expense. On credit side, usually we write only two items. One is by net profit brought down from profit and loss account, and other is interest and drawings, which is an income for the business. And on debit side, we record all the items like interest on partner's capital, partner's commission, partner's salary, transfer to reserve, divisible profit, everything will record it on the credit side. So let's get started. So I have prepared the table on the debit side and the credit side. If first of all we start with credit side. First of all, after reading the question, you just write on the credit side by net profit, and the net profit given in the problem before all adjustment is, if you see it, it is 70,000. It is 70,000. You are saying that it is 70,000. So net profit is 70,000. Then after, if you read the first adjustment, interest on capital. So it is an expense for the partnership business. Also on the debit side, we have to write to interest on capital. So X capital balance is 50, Y 60, and Z 70. So the rate of interest is 5%. So 5% of 50,000 gives you 2,500. 60,000, 5%, 3,000, and the 5% of 70,000 is 3,500. So if you add all this total, got my point? 5% of 50,000. If you use a calculator, it is 2,500. 5% 63,000. 5% 70,000. 3,500. If you add these three total, you will get 9,000. So you need to bring it to the final column. So I'm scrolling little bit. Then second adjustment is X is entitled to salary of 500 per month and Y rupees 3,000 per month. So you have to write here the partner's salary. See, Y's X salary is 500 per month, but you are preparing profit and loss appropriation account for 1 year. So 500 per month, 1 year consists of 12 months. So whenever there is a question regarding monthly, then you need to multiply by 12. So 500 into 12. So X is entitled to salary of 6,000 per annum. 500 per means 6,000 per annum, and Y is 3,000 per annum. So you don't have to multiply, or you can multiply by 1, because 1 year means 1. So 3,000 into 1, Y directly, and X per month. So you need to multiply by 12. So altogether it is 9,000. So you got my point. So partner's salary, it is on the debit side. So 500 into 12. So 6,000 annual salary, and Y annual salary is 3,000. So this is very important. And the other part is Z is entitled commission 10% on net profit before charging such commission. Now the question is of Z's commission. See, commission may be charged on net profit, divisible profit, turnover, but here the net profit is based on net profit. The commission is based on net profit, that is also before charging such commission. The formula for calculating commission or net profit before charging such commission is net profit before commission into rate divided by 100. Net profit before commission into rate divided by 100. And as you know, the net profit given in the problem is 70,000. Okay, 70,000, and the formula is rate by 100 only. So rate is 10% by 100. So 70,000, 10%, that is 7,000. Got my point? So you need to multiply net profit 70,000 by 10%. So 10 by 100. So altogether you will get 7,000. So all items are completed. Now we have to find out the divisible profit. In order to find out divisible profit, what you have to do is you have to add the credit side first. So on the credit side, we have only one item, that is the net profit, that is 70,000. You are seeing here 70,000. And we have from 70,000, you have to deduct all the items, that is interest on capital 7,000. Interest on capital 9,000. Partner's salary is also 9,000, and partner's commission is 7,000. So if you deduct this 18, 20, 25,000, you will get 45,000 as a divisible profit, and this is transferred to partner's capital account. So I have written two divisible profit, transfer to partner's capital or partner's current. See, there are two methods of preparing partner's capital account. One is fixed capital method. On the fixed capital method, you have to prepare partner's capital account and partner's current account. On fluctuating, you have to prepare partner's capital account only. So if it is fixed capital method, you have to transfer to partner's current account. If it is fluctuating capital method, you need to transfer to partner's capital account, or you can simply write to divisible profit. Okay, so after balancing the profit and loss appropriation account, obviously it is a ledger. The surplus is 45,000, and it has to be divided among three partners in the ratio of 1:1:1. So 45,000, if you divide amongst the partners in the ratio of 1:1, each partners will be entitled to 15,000 each. So this is how we have to prepare profit and loss appropriation account. Dear student, this is my first attempt to teach you practical problems. I'm not using the board I told you earlier because it may be too time consuming. So in order to save my time and your time also, I have come with ready-made solutions, and I'm trying to explain you as much as possible. So please cooperate with me and comment how can I improve my videos. So I at the end I want to explain you once. So first, bring by net profit. So if there is interest on drawings, you have to write interest on drawings. So on debit side, there is information regarding interest on capital at the rate of 5%. So I have written to interest on capital. If you see here, interest on capital, so X 50,000 5%, 2,500, Y 60,000 5%, 3,000, Z 70,000 5%, 3,500. So altogether you will get 9,000. You have to bring to the final column. Then partner's salary, X is entitled to 500 per month, so you have to multiply 12, so you'll get 6,000 per annum. Y is already given per annum 3,000 into 1, or you need to multiply once also, it is 3,000, so 9,000. And Z is entitled to commission of 10% of net profit before charging such commission. So formula is net profit before commission into rate by 100. So 70,000 into 10 by 100, that gives you 7,000. So add credit side and debit all these three items, so you'll get divisible profit as 45,000. As shown in the figure, it is 45,000. Okay, so you have to divide it amongst three partners equally. So 1:1:1. So each partner will entitled for 15,000, 15,000, 15,000. Please comment so that how can I improve my practical videos, so I can come with more and more practical videos to help you as much as possible. So thank you for today. Please like, subscribe, share my channel. Have a good day.